Oracle. This company is a sleeping giant. This company has been around for many years. They are one of the leaders in cloud computing software development, and they will be one of the leaders leading us into the future of this artificial intelligence technological boom that we are currently in. We're going to be looking at some of the fundamentals of the corporation. This is going to give us the reason why we need to be invested in this company. We're going to look at technical analysis. That's right, the charts. We're going to implement strategic strategies that have been proven to be successful by some of the greatest investors and traders of all time. My name is Scott. I've been trading and investing in the stock market for over 25 years. Let's dive in. Let's take a quick look at Oracle's financials. What we want to look at is this right here, the profit margin. For 2022, quarter ending in May was 15% increase. The quarter ending in May in 2023 was 17%. The quarter ending in May in 2024 was 19%. And the quarter ending in May of 2025 is 21%. We are looking at the total revenue, and we're going to look at the gross profit. For the quarter ending in May of 2022, we have a total revenue of $42 billion with a gross profit of $33 billion. 2023 is $49 billion with a gross profit of $36 billion. 2024 is $52 billion with a gross profit of $37 billion. And in 2025, we have a total revenue of $57 billion with a gross profit of $40 billion. Now, the challenge this company is going to have going forward is such a large corporation that it's going to be a little more challenging to get those 200, 300, 400% returns. Although today it had a pretty substantial increase today, gapped up on 10 times volume. The stock needs to pull back. It's currently extended. Let's take a look at the charts to see when can we get in and make some money with Oracle. Now let's take a look at technical analysis. We're going to take a look at the charts, and we're going to implement some strategies that have proven to be successful of when to get into the stock and how to dollar cost average into the stock. So we're not just blindly guessing and buying. We are implementing a strategy that has proven to be successful. Today is September 10th, 2025. It's a Wednesday. Oracle closed today at an all-time high of 328.33, and it hit an all-time high of 345.72. Now, this is a 20-year monthly chart that we're looking at, and the 20-year low is $11.75. Well, let's get a little more granular to see when is a good time to buy into this company. As you can see, this stock goes through periods of its major drawdowns, and we are currently in a parabolic move to the upside. So we're going to want to wait a little bit on this. And the only time that you want to buy individual stocks is your household finances need to be in order. Your foundation needs to be solid. Your IRAs and your 401ks need to be maxed out at a minimum of 15% of your household income needs to go into your 401ks and your IRAs. You and your spouse individually need a 6-month emergency fund. Here we are looking at a 1-year daily chart. So each candle represents one day. What we want to do is we're going to add moving averages. The 10-day moving average is the white line. The 21-day moving average is the purple line. The 50-day moving average is the green line. And the 200-day moving average is the red line. And the reason why this is important because we want to wait. As you can see on this major downdraft back in this area here, we had a major drawdown from 198.31 all the way down to 118.96. If you own this stock individually and all your eggs were in one basket, your portfolio was literally cut almost in half by over 80%. Now, when you look at today's volume was incredible. 129 million shares were traded today, which is really substantial compared to the average volume. And then when you look at this particular candle, this means that when you see a long wick like this at the top, that's selling pressure. Even though the stock gapped up and opened up here, pushed all the way up and then sold off. This is actually selling pressure is coming in
but we have this major gap. This gap needs to get filled, and this gap will get filled. When? Nobody knows when that's going to happen. So we need to be patient. This stock is completely extended. You do not want to buy at this particular point. Let's let the dust settle. We want to buy this, but we're going to buy it closer down to the 243.49 range. This here. This is going to give us a level of support. Our first level of support is going to be right here, which is going to be the 260.87. So if you're going to invest $10,000, you want to go in on a percentage ratio basis of 4 different positions at a 25% cost basis. So you're going to do $2,500, and you're going to wait until the stock pulls back down to the $260 area, and then you're going to wait until it pulls down to the 243.49. And also, you're going to have a level of support which is going to be down here at the 218.79. I know this seems highly unlikely that it's going to come back to these areas, and it might take a while to do that, but the stock is extremely extended. You do not want to buy in this area. You want to wait for this stock, and you want to wait for this gap to get filled. That will complete our analysis. I hope this was helpful.
If you have something you would like to share with us, please leave a comment below. We want to know what's on your mind. For more analysis like this, subscribe to the channel, and we'll keep you informed on the latest, greatest technology and the latest, greatest stocks that are going to be the next superstars of the industry. Always remember that the stock market is very risky, and always do your own due diligence. God bless and happy investing.